Morning. Good afternoon. You can see me okay, hear me all right? Put into the chat, let me know. Good morning, Erwin. How are you doing? I am feeling a lot better. I hope it doesn't come back. But yeah, feeling a lot better. Hey, Ayakame, how are you doing? Hey, Jimmy. I am doing well. And okay. Alright, just a bit puzzled with TradingView. A live stream is on. Hey Spiros, how are you doing? Hey Jew Marinas, good morning. Yeah, just wanted to let everyone know we are streaming live on TradingView as well. From what a message I received from TradingView is that the live streams on TradingView will stop offering live streams on TradingView from the 7th of April onwards. So if you want if you are watching on TradingView and if you want continue to have live streams, you can jump onto my YouTube channel. You can get the live streams there on a daily basis as well. Thanks, Linley. Okay, so now we are here on a Monday. We're back on a Monday, brand new week of trading. I don't think we've had all the fireworks from yesterday. I'm not sure whether we're going to continue to have the big fireworks today, but we're going to prepare for it. Again, as usual, on Monday, we will be looking at the charts on the H4 time frame. We'll be looking at the charts on the H4. Tuesday, Wednesday, Thursday, Friday, we will be looking at it on the H1 time frame. All right, so this is the look in the week ahead. It didn't do too well with last Monday's analysis because we had all the big surprises from the central banks. So they kind of screwed all the analysis around upside down. So we'll try again this week on the H4 time frame. If you are new to the session, do drop a message, say hi, let me know where you're joining us from. I would love to find out. And for all the regulars and the growing number of regulars, a big welcome back. Thank you for joining me on this session again. The link is there for the Discord channel. If you haven't already joined us, do make sure you do. Click on the link and join us on Discord. And also, I have also added in a form, a Google form that you can help me fill up. I would appreciate that massively. Just for a quick testimonial from you guys who've been following me all through, I think almost 1 year, more than a year now already. All right, hey AL, how you doing? Hey, good morning Ray, good to see you. Have I ever thought about streaming on Twitter? I have not actually, but now given that you're suggesting that, maybe I should. I will look into that. Thanks for that, Erwin. Good morning, Pips Apprentice. How are you doing? Now let's keep going. A quick disclaimer. Any information contained on this webinar should not be construed as advice and is presented as educational material only. Please do your own due diligence as the contents of this webinar are not intended to be a recommendation to trade a financial product as your objectives. Financial situation and needs has not been considered and you should consider its appropriateness to your circumstances. Now, with that said, oops, take that away. So yeah, that's for anyone who's on TradingView and watching, jump onto YouTube. You can find my channel there. It's just my name. That's where we do our live streams. So you can join us. It's like Inception over and over again. But you can join us on the live streams here on YouTube when it stops on TradingView. Okay? And if you can help me out massively, at any time during the stream, do remember to click that like and subscribe button. That would help massively with the algorithms to help us get more people onto the live streams. Now, looking at the news for this week, Monday. I have not entered any trades today. Earlier this morning, I was highlighting that we were looking at potentially a reversal on the Aussie dollar. So I was looking at that on the H1 time frame. I saw that bounce off this level, thinking that it might push up, but it was, there you go, right outside the Bollinger, so it came right back in. So that was something I was looking at early this, well, that was at 10 a.m. this morning, but didn't happen, reversed right back down, okay? Why? I don't think much is going to happen, especially today. You can see that we don't have much news for the day. We do have new home sales for the US to be released. Not expecting a big surprise here. I think that after what happened last week, quick recap just for interest's sake. What happened last week was we had the BOJ for the first time in 17 years hiking rates from a minus 0.1 to a 0.1%, getting out of the negative rate regime, moving up to the rate hike path, removing their YCC, their yield curve control, but still maintaining their QE, their bond buying on the JGBs. So that's one reason why we saw the yen continue to weaken. Following on from that, we had also the FOMC, the US FOMC, keeping rates on hold at 5.5%. No big surprises there, but it was a little bit dovish where we saw the dollar spike right back down following the release of this news. But through Thursday, we had a surprise from the naughty SNB, the Swiss National Bank, where they took rates from 1.75 down to 1.5%, a 25 basis point rate cut. The first of the central banks to cut rates, the Swiss National Bank, surprising markets. We saw massive weakness on the Swiss franc, and then after that at 8 p.m. GMT plus 8, we had the Bank of England with their interest rate decision holding it at 5.25%, but the voting changed from 216, 2 voting to increase, 1 voting to decrease, 6 voting to hold, to become 018, where no members were voting to increase, 1 voted to decrease, and 8 voting to hold, signaling a dovish BOE, and that's why we saw the pound dollar drop quite significantly. So all that, big surprises from the BOJ, big surprises from the SMB, no surprises from the FOMC. A small surprise, or well, not surprise, but a small continuation from the BOE, saw, you know, good spikes and retracements and corrections on right across the board on all the major currencies. So that was what happened last week. On to this week. Not much today, as I've been saying for the third time now already. Tomorrow again, not too much. We do have core durable goods and durable goods orders for the US, looking like a bit of a recovery. It was minus 6.1%, revised down to minus 6.2, expected to swing month to month to 1.2. Core durable goods orders from a minus 0.4 to a 0.4. So looking at the goods orders, durable and core durable goods, staging a good recovery from a negative territory to a positive. On to Wednesday, we have the CPI for the Aussies to be released, 3.4. A bit surprising to see that they're anticipating a 3.5% on CPI, on inflation growth. That's not going to be very good news for the RBA, because as they have indicated, looks like we're on the path towards inflation growth slowing down, but it's sticky. There are some resistance to see it jumping from 3.4 to 3.5, moving slightly further away from its target of 2 to 3% is not going to be good news for the RBA. Might see the Aussie stage a little bit more of a recovery, still dependent on the dollar index from there on. On to Thursday this week, we're going to have Canadian GDP, US GDP, and consumer sentiment and pending home sales from the US. I think the main thing that I'm going to be looking for is the final GDP for the US to stay at 3.2%. 2%. This is quarter on quarter. That would be relatively good news for the US. And then onto Friday, we have the US core PCE price index, a big indicator for the FOMC as an inflation growth number. If on a month-to-month basis, it goes from a 0.4 down to a 0.3%, that's going to be good news. That's going to be good news for the FOMC to show that inflation growth is slowing down, but it's a month-to-month number. It might not be enough. The next meeting is in May. A lot more data to come around, so I don't think that's going to move prices too much. And also to add that on Friday, we're not going to be having a session on Friday because it is going to be Good Friday. All right, it's going to be Good Friday all through to Easter Sunday and Easter Monday. So it's going to be a super long weekend from Friday all through to Monday. I don't think we're going to, I know for sure we're not going to have a session on Friday. I'm undecided whether we're going to have a session on Monday next week because it's going to be super quiet. You know, Aussies, Kiwis, Swiss, Euro, UK, all on a bank holiday. I don't think we're going to see much volatility to talk about on Monday next week. But I'll tell you that through the week. For now, the main thing or the main volatility or main liquidity is going to come on Thursday, a brief one on Thursday, and then a bit through the week on Wednesday. And yes, I am still coughing, I just found out. So with all that, please, this week is not likely to be a week where you'll be hammering out trades here, there, left, right, and center. Not like last week. I ended the week on a couple of hundred pips to the upside. So, you know, especially on the yen, on the pound, I think mostly on the yen and the pound. But I don't think it's going to happen this week. This week might be a time where you consolidate your position. It's coming to the end of the month as well. We'll start Monday on the 1st of April. It's going to be a brand new week, brand new month next week. So, you know, it might be a consolidation phase for this next couple of days. All right. Hey Nav, good morning. How are you doing? AL, can we look at NASDAQ and S&P at the end? If there's time, there will be time. I don't know if there's much I can add to it, but yes, we can have a look at it. Hey Brian, how are you doing? Good morning, Angel Case and Diana. Good to see you. Welcome back. Hey Ray, which currency will be the weakest today? I don't think we're going to see any massive weakness on the currencies today. My best guess, without much analysis at this point, my best guess will be weakness on the yen, right? If you know, the quickest answer will be weakness on the yen, but we'll look through all the major currency pairs to have a look at it. And Booba, good morning. How are you doing? Hey YJ, good morning. Good to see you. Hey D-Train, hey Goju. D-Train and Goju, you're big followers of mine on big regular followers of mine on TradingView. Just want to remind you guys again, TradingView ending the live streams on the 7th of April. So you should get into the habit of jumping onto my YouTube channel to catch the live streams moving forward. Okay? Now, with all that said, looking at the charts on the H4 time frame, this is the dollar index. On Monday last week, it was sitting right there, and I thought it could test and then push right back down. We know what happened. The FOMC kept rates on hold, but the FOMC kept rates on hold, pushing this down, but the Bank of England, causing the pound to weaken, pushed the dollar index right back up. Okay, so we can take that away. Dollar index right now sitting just below 104.40. Right, sitting below 104.40. That level still holds. Take that away. I don't need that because that's done. I will put in this point here as a dotted line, And you see that these points here together with that is possibly what kept the dollar index on hold at that point, with a major resistance at just below 105, or we can even say 105 as a good round number resistance there on the dollar index. What I'm thinking for this week for the dollar, I was thinking that it might retrace a little bit, right? But I'm not confident that it could come down to below 104. So because of that, what I'm actually thinking is that in this case, today being the 25th of March, the dollar index needs to stay above 104, which is this level here, to maintain its bullish move, to retest 105 resistance. Yep. Okay, so what I'm thinking is that it could sit here in consolidation, maybe even come down to test this point and push back up to that 105 resistance level. I don't see, well, we don't see any big news events. Let me just close that. We don't see any big news events here that could drive the dollar massively to the downside. In fact, a recovery on the durable goods could push the dollar to a bit of strength. CPI might hold, well, might be at 3.5, might see a bit of strength on the Aussie, so that might hold it back. Member Waller speaking about monetary policy at Economic Club of New York, that might bring about some volatility, but it's at 6 a.m. not 6 a.m. GMT plus 8, but still not my trading time frame, so something to be careful of on Thursday morning. I feel that the GDP, the final GDP for the US, could bring about some strength again at 3.2%. So that's why I think that we might see a bit of a consolidation or retracement. So long as it stays above 104, we're likely to see it come back up to test that resistance of 105. Very similar to this move, right? You see this big push up, consolidate at this point, retrace right back down to stay above 104, to go back up to test 105, and then maybe we'll see that big correction back down again. Okay. Diana says, I was a bit lucky to catch such big move on the US Swiss franc. Didn't check if it was news. Got good pips last week. How many pips was that, Diana? Let us, if you want, if you can, share that. I would love to find out. But yes, if you are a regular trader of the Swiss franc, there was a very good opportunity there. So that's the view for the dollar index. Bit of a retracement, possibly to come back up to 105 resistance. Then looking at the currency pairs, thinking that the Kiwi was going to bounce, did not happen. Did not even trigger the trade. Take that away. Did not trigger H4 trade. It's pushed down. It's continuing on with that massive downside, right? It went down, consolidated, pushing lower again. Next big support, the major swing low is down here. I would put it at that round number of 0.58 as an area. I would have a hesitation level here at 5870.71. So what I'm looking at here on the Kiwi, all right, anticipating a bit more strength on the dollar to come, maybe later on. Consolidating at this point, might retrace a little bit Wouldn't do anything on the Kiwi unless it breaks below the support level. So 5940, stop loss 30 pips, take profit, you could go down to 60, 65 with the big potential of 130. I don't see any big news that could cause it to go 130 pips to the downside. So I think 65 would be a reasonable first target level. Very nice, Diana, 120 pips, good job. Fantastic, super happy to see that. Okay, so let's look at this. Kiwi, we're looking to sell at 0.5940. 0.5940, 30 to 65 to the downside. Stop loss 30, take profit 65 to the downside. That would make sense. Okay, I'm happy with that. And then to the Aussie. Okay, Aussie, we can see it still in that area, right? Area between the support and the resistance. What we saw from last week, it broke through 61.8, retraced, shot back up. This is because of the weakness on the dollar, pushing it right back up. We thought it was going to happen a little bit earlier, push right back up. And what you would see now is that, take that away because that's done. It's formed, and I'll show you that. If you took that point there, you see that it formed a resistance, it's formed that support, overlap resistance, came close to the area. It's still within this range. So what I want to see, just to be a little bit different from the Kiwi, is that I want to see this come down, test and bounce. Very similar to what happened here. Okay, so in case we are wrong on the dollar and it doesn't strengthen, and in fact if it does weaken all the way back, especially with the CPI to come from the Aussie later in the week or in the middle of the week, we could be looking at 6480, a 35 pip stop loss, and a good 140 take profit to maintain, to keep within that range. Okay, so that's what I'm looking for on the Aussie. It might form a bit of a, I was going to say head and shoulder, but it's not really a head and shoulder, but break that double bottom, come lower, form a good double bottom since 14th of Feb to the 27th of March, form a double bottom and bounce. You'll be looking to buy 6480, 35 pip stop loss to a 140 pip take profit to the upside. So 0.6480 stop loss 35, take profit 140 to the upside. I'm super happy looking at the 120 pips, knowing that Diana made 120 pips. The next time I'm in Dubai, the coffee is on you. You're going to buy coffee. Okay, let me just take that away. Okay. 6480. Okay, I'm happy with that. Then on to the yen. All right. Yen, this is on the H4 time frame, so we got to put in new lines. We're seeing that hit. Resistance is right up there at 151.89, almost 152. We were trying to see maybe the Bank of Japan was, if they took action, would have strengthened, was anticipating that it would strengthen the yen. They took two-thirds of an action. They've hiked rates, they've removed YCC, but they've maintained purchase of the JGBs. So we did not see that strength on the dollar, on the yen come back into play. In fact, we saw it continue to weaken towards multi-level, multi-year highs. This was on the 13th of November where we last saw this point, and if I drag it right across, you'll see that the last time before that was on the 21st of October 2022. So 22, 23, and again now on 24. What you will notice as well is that 22 came to this point, big, zoom that out, big reversal back down, massive from October all the way through to January, big downward push, climb right back up again in November, came right back down by almost January to 140, and then now back up again. So what I'm looking at here is not further upside. I'm waiting, and you have to be patient here for possible strength coming back into the yen. All right, and if we look at this point here, we've seen that at 150.80, the 23.6 level there, 23.6 right there, and it's likely to consolidate in this range. And I'm thinking that it's going to consolidate, and I'm thinking that it could pull back. I want to see whether it's a correction, but I don't see a big reason for this to happen, especially with the news here, you know, yen weakness spark intervention concerns ahead of Fed talks. BOJ has been oddly quiet about possible interventions, right? Most of the time, they talk about interventions when it comes to about that 150 range. So far hasn't said anything. I'm just thinking that I'll be very careful to keep buying it up. So I'm looking at 150.20. Let me just check. No, it'd be too low to get in there. I think the consolidation there, 150.20 stop loss will be quite wide at about 60 pips. We're looking for that massive correction back down. I'm not even going to tell you to look for 350 pips to the downside, as much as that would be super. Right? I don't think that would be something reasonable in a time frame. I think if you look at that, that'd be good. Right? If it comes down, consolidate. Most likely going to consolidate at this point, but if it does break below that resistance turned support level, 150.20, 60 pip stop loss, 160 pip to the downside towards that 61.8 retracement level. So US yen, I'm considering that is likely to consolidate, but we're looking for breakout to downside, 150.20, 60 pip stop loss, 160 pip take profit. Sell 150.60. 0.20, 60 to 160. Stop loss 60, take profit 160. That would be a nice trade. I would be very happy with that, but it would probably take a little longer for it to play out. We need the Bank of Japan to come in and do an intervention, or to talk about intervention for that breakdown to happen, I think. Hey Richard, how are you doing? Good morning. Hey Mr. Matsa, how are you doing? Hey Lydia. Now on to the pound dollar, right? Kind of got it right. where we expected to push up and then right back down, just not to the magnitude that we expected. It did bounce off that 61.8 before pushing down. Generally, we were looking for that downside move on a pound dollar. Given that it's broken 61.8, we take all of that away, understanding that it's within the range. The support is formed there at the 38.2. I would say that we'll wait for it. We're going to see a reaction actually. We're going to see a reaction at this point here of 1.2530. Oh, yeah, 1.2530 or 1.25 actually. I'll consider this whole thing as a range. There we go. So I'm looking at this whole thing as a 1.25 support area, looking for it if it holds or if it breaks. Next level down, I was looking at this point here, which would coincide with 61.8. That's my support level. Okay, I'm happy with that. Take that whole area there as my support. So what I'll be looking for here would be, if it does break down from that support level, actually you have both that opportunity. So 1.2840, stop loss, you can do 40 pips. Take profit, you can do almost 120 to the downside, or if it comes down and it bounces. So we're looking for either that or that to happen. If it bounces right back up, forming again that double or triple bottom, you're looking at 1.2550. Stop loss, again 40 pips. Take profit, you could go all the way back up to about 200. 200 seems very optimistic. I don't even see that happening. No, okay. It could bounce, but I think the safer thought would be a breakdown. I do want to plan for a possible bounce. Yeah, okay. Let's look at this as 1.2550, stop loss 40 pips, take profit, could go back up to about 140 to that mid level first. Yeah, I got that wrong. This needs to be a long. 1.2550, 40 pip stop loss. Take profit would be 140 to the upside. Okay, so that's what we would do for the pound, right? BOE voting is done. We're looking for reaction at support of 1.25 at 1.25. Okay, then if it breaks support, we'll look to sell at 1.2480, 40 pip stop loss, 120 pip take profit. 1.2480, stop loss 40, take profit 120. Or if it bounces at support, if it breaks, we'll do that. If it bounces, and we look to buy at 1.2550, stop loss 40, take profit, I believe it's 120 again, 140. There we go. Right? Okay, so remember right now what we're looking at is a lot of, it's still waiting, a lot more waiting to do. Right, yen consolidating, pound, we're looking for reaction at the support. Even the Aussie or the Kiwi and the Aussie does have some levels to move to first before we look for a reaction. So nothing to fire out right away. Onto the euro, that worked out nicely, but it did shoot up because of that dollar weakness before coming right back down to that 61.8 level. And you look at that, how nicely it reacts to that 61.8. Big drop, massive drop here, came right down to 61.8, stopped, very similar to what happened on the 28th and the 1st of March. Stopped, and it looks like it could bounce back up. Okay, so we're looking at what happened here previously. Oops. We're looking at what happened here previously and thinking that it could show something similar. Let me just check. Bit too many lines down here. Okay. Possible bounce. We're planning for a possible bounce on the euro, 1.0830. Stop loss, so a bit of a closer move. Stop loss about 35. Take profit, I wouldn't go for 40 here. I would try for that at 100, 105 to the upside towards that previous level. Now, I'm just thinking of this move. There might be a bit of a hesitation there. I don't think that's a good resistance because of how easily it broke, but I will consider that as a bit of a hesitation level. Okay, so onto the euro. Oops. Onto the euro, we're looking for a possible bounce off 61.8. With that, we'll be looking to buy onto 1.0830, 35 to 105. Buy 1.0830, stop loss 35, take profit 105. There we go. And then onto the Swiss franc. This was Dinah's favorite from last week. 120 pips profit as it pushed to the upside. This move there because of the surprise from the Swiss National Bank causing it to shoot up towards that resistance level. Right, with the next major resistance right up here at 0.9230. Possible hesitation at about that point there at 9116. What I'm also looking at, or what I'm noticing here, is something like that as well. Something like that, supporting, that trend line supporting the move to the upside for the Swiss franc on the H4 time frame. Do I take a less than 1:1 risk to reward? Yes, I do. Yes, I do. Depending on how quickly I think that it could play out. So usually when I take something less than 1:1, I would like for it to be quite quick to play out. Then if you look at this from here, put in the levels, we know we have 50, we know we have about that point. That retracement seems like it's happening. It's going to come down to about that point. We might retrace down to 23.6. One consideration was whether it's going to come down towards the trend line. I don't like this one too much. I don't think it's going to come all the way down to the trend line. I feel that there might be a bit of a retracement on to. See, the thing is, I don't know how far. I can't guess wisely on how far it could retrace by. It could very well come down to that 50% level. Right? It could very well come down to that 50% level. I'm thinking in the middle range here. So what you want to do is look for something like that. Right? So I would say do nothing onto the Swiss franc yet. I always say do nothing on the Swiss franc. Diana says, me neither, couldn't analyze till where it will go. You know, if we can't figure out where it's going to head to, I would say do nothing. Wait for retracement to complete before first. That's what we have to do. Sometimes sitting on your hands doing nothing is a good idea. Then onto the CAD, right? Came down close to where we thought it was going to bounce, bounced a bit earlier than that, pushed right back up. Take that away. That move was also because, of the CAD CPI, and then the dollar weakness, and then the dollar recovery right back up again. I like how it's moving right now, because as much as we have that as a resistance, even if I refined it right to this point, it's still within that resistance area. What you could be looking for here onto the US CAD, maybe a double top, right? Maybe a double top to push back down. Maybe that resistance holding quite strongly, very similar to what happened here. So what I would be looking for here would be maybe if it breaks below 1.3560. I'll give it a bit of space. You can't go aggressive. You can't go aggressive and start thinking of selling right now. You know, maybe 1.3570. 40 pips would be a bit too much on a stop loss, although your take profit could go down to 105. I think that reasonably, if it does break, oh, okay, I'll tell you what you do. What I would be looking at is, if it does break down, I would even be looking at 6.5. 45 pips stop loss, 100 pip take profit, you can go in 50, right? Or 1:2 there. 50 pip stop loss, 100 pip take profit, but if it pushes down with enough momentum and liquidity, we could very quickly move this stop loss to break even to secure some of the to secure that downside risk. Okay, so onto the CAD, what I'm looking for is a rejection of resistance. I'll be looking to sell 1.3565, stop loss 50, take profit 100. So 1.3565, stop loss 50, take profit 100 to the downside. Buba, I have a good question. How do you figure out when the retracement is complete? In relation to the US Swiss franc, that's when, if I see it push back up, right? So that's not complete. Something like that. Okay, so we look for that to push up. Retracement comes back down. Once it starts pushing back up, I would say retracement has complete. Another example would be that, you know, push up, it's retracing. When I see it push back up again, then I would say that retracement has completed, or is not forming a lower low. Then that's where I'll consider that retracement has complete. Okay, hope I answered your question there, Buba. Then onto gold. Right, gold bounced off as this one did exactly as we had planned. I didn't trade gold at all this week, just too busy with all the other pairs. but it found that 23.6 level, that previous high and at 23.6, and bounced right back up, right, bounced off 2150 to retest 2200, bounced off 2250 to retest 2200, and beyond it got as high as 2222 before retracing back down now. So what I'm looking at here on gold would be, again, for it to, because we're anticipating that dollar strength scenario, right? So we're anticipating that gold might push back down. We're looking for, again, a reaction along that 2150 level. I think that this retracement and push up with that resistance there, 2150 might hold. 2150 might hold and we might see a bounce, but until then we're not going to do anything. So onto gold, we're going to be looking for a reaction at 2150. Okay, so that's the major pairs that we have there. Looking at the, you can see I don't do many analysis on this, take all that away, but looking at the S&P, pushing is currently at 52.34. I don't see any reason. I was watching a couple of news items this morning. We don't see any big reason why it's going to show any major retrade, any major correction at this point. So looks like it's going to retrace slightly, but we're going to look at a continuation of the upside. And as I was drawing that line, if you notice, you'd be able to see a bit of a channel to that upside along that upward move. So it might retrace a little bit before pushing back up again, but it does look like continuation to the upside for the S&P. And I was asking about the, well, we look at all of it, right? So the US 100, same thing. I think a bit of a retracement, right? That trend line is still holding. Everyone tells me, most people are thinking it's so high, it has to come back down. That happens with a lot of things that you think about, right? It's so high, has to retrace, has to correct, but it just keeps going higher and higher. I would say that brief retracement possible before continuation to the upside is most likely. I don't see any big reason why we should see it have a major correction at this point, until I think the major correction could come when, or if or when the FOMC starts getting serious about their rate cut scenarios. Even then, there is discussion, or there are thoughts that even a rate cut is, not going to push, not going to cause or lead to a major correction either. So with all that said, Ayakama is asking, can market range be considered as a retracement? It's more a consolidation than a retracement. So it could consolidate and then continue. So not exactly a retracement, but just moving right across. Okay, consolidation of a direction first. Thomas is asking about pound yen. Yes, we can do that. So again, yen, we're positioning, right? We're not, this is not intraday, this is not even swing, this is probably a position trade, positioning for possible correction to the downside. Pound, a bit uncertain, but looks like it might push up a little bit, but we're looking for maybe a downward push. So with that, onto the pound yen, if I clear out all those old lines, there we go. Looking at this, I do see a bit of a retracement. That's holding as a bit of a resistance. For sure, that's a major resistance. And that's going to be my support. So now looking at this, and let me just check one more level. See, it's right at that 50% level. So if the pound continues to push lower, we're going to see this come right down. You could be looking for a downside move below 190.35. I'll keep it quite tight at about 55. 210 to the downside, but it does, for that big confirmation, it does need to break that trend line as well, right? So you could be looking at a tight one at about 100. So 55 to 100. If it breaks that trend line, you do have further downside potential. But you've seen it bounce off this trend line multiple times already. And I think if I put in 61, that would call, no, that's fine. The break 50, I think it could come down towards that trend line, most likely something like that. Back up. Depending, this all depends on the pound yen, the pound dollar, and also the US yen. The volatility or the potential strength. When is this yen on strength coming back into play? Okay. So again, if you are on watching on TradingView, hang on. Mr. Metzer, what about, and GU is looking good. Love to see GU give us a bullish rally. Yes, it's at that support level. We're looking for something to do there. Mr. Matt SA was in gold trade when it bounced off 2150. Very nice. Lydia is saying, do you think pound yen could go above 195? I don't think it would after BOE. Yeah, I don't see it getting above 195. 195 is a mile away. It feels like a mile away. I don't see that happening. I actually see, especially, I hope that we see the yen correct back down. That would drag the pound yen down. Intervention. The key word now again, intervention concerns. I want to see the Bank of Japan say that. I want to see the yen strengthen back. That would drag the pound yen, the euro yen, the yen right across the board, right back down again. Okay, so again, if you can help me out massively, if you haven't already, do remember to click the like and subscribe button. If you are watching on TradingView, I've got a message from TradingView that the streams will end on the 7th of April. So do get into the habit of joining me on my YouTube channel. Then you can continue watching the streams from the 7th onwards. And if you haven't already, Discord channel link is there for you guys. Look forward to seeing you all on Discord. Might be a quiet week ahead, but please trade well, trade safe. I'll catch you all tomorrow, same time, same place. Take care now. Bye.